Welcome to the next video. We will talk about the equilibrium entry, aka the 50% entry. Okay, the concept is the same. As you can see, price is moving in an uptrend here, creating a series of higher highs and higher lows on the 15-minute chart. So the black line is the 15-minute structure. Price created this 15-minute demand zone right here because it broke structure here with an inefficient push. And let's say it swept some liquidity from this region. Okay, so we have this really valid demand zone right here. Price came back down to mitigate this zone. And after the mitigation, it changed character to the upside here and broke through this supply zone and broke through this supply zone. So we have a valid change of character with an inefficient push. The inefficient push happened from this candle right here. And if you take a closer look, you will see that the wick of this candle is bigger than the 50% of the whole candle. So there are more wick than body. In these cases, we will use equilibrium entry. And equilibrium entry is the 50% entry. We have a simple tool for this named Gambax. Right here, as you can see, it will mark out the 50% between the high and the low. I will show you how to set this up. Here are the settings on the first box: 0, 1, 0.5, no left labels, no right labels, no background. This is a really simple setup for the Gambax. That's how I use it. So let's just pick our Gambax and use it on our box, use it on our demand zone. As you can see, it will perfectly mark out the 50% of that zone. And in these cases, when the wick is bigger than the 50% of the whole candle, we will use the Gambax and we will use the equilibrium entry. Okay, I just set an order limit here, and price has a great chance to tag us in the trade on the 50% of the zone. How can this Gambax, how can this equilibrium entry actually help us? We usually use 1.5 pip stop loss to 2 pip stop loss. 2 pip stop loss is our maximum stop loss, but we will talk about this in the money management unit. Okay, so in the most cases, these candles, these equilibrium candles, will be huge. So if you set an order limit on the beginning of this box, on the beginning of this zone, the 2 pip stop loss won't cover the whole zone, so you can't enter in a trade. You can only enter a trade if the stop loss can cover the whole zone. So in this case, we will want to use the equilibrium entry because the equilibrium entry will cover the whole zone and the stop loss will just below that zone. Okay, that's how the equilibrium entry, aka the 50% entry, can help us. That's also a golden rule. If you see a candle like this, so the wick is bigger than the 50% of the whole candle, meaning there are more wick than candle, we will always use the 50% equilibrium entry. That's a golden rule. Okay, let's see a live example for this. Okay, let's see the live example. As you can see, price created this 15-minute demand zone right here that created huge inefficient push to the upside on the 15-minute chart and broke some structure. I won't show you that zone on the 50-minute chart because that's not really important right now. We will talk about the equilibrium entry. As you can see, price came back down to this demand zone, mitigated this demand zone. And this was the last break of structure to the downside with the whole body break. This was the last supply zone, as you can see, and price broke through the supply zone. So it means it changed character to the upside. The change of character happened from this candle right here. And as you can see, this candle's wick is bigger than the 50% of the whole candle. Actually, the whole candle is just a wick. There's nobody, as you can see. So in this case, we will just pick our Gambax, mark the zone out, use our Gambax on the zone, and it will perfectly mark out the 50% of the zone, as you can see on this line. And we will use the 50% entry because the wick is bigger than the whole body. And as you can see, price perfectly mitigated the 50% of this candle. It didn't respect the top of the zone. It just came down to mitigate the 50% of this zone. So that's the power of the Gambaxes. That's the power of the equilibrium entries. It gives you more precise entry and gives you better and bigger risk-reward ratio, and also protects your capital from losses. So yeah, that's the power of the Gambaxes. Once again, the wick is bigger than the 50% of the whole candle, Gambax on the zone, 50% entry, and you are in the trade. See you in the next one.